have so much to unpack in the commodities market today, and we have Mr. Bismarck Rewane, MD, CEO, Financial Derivatives Company. Great to have you on the show. Good morning, sir.
Good morning. Thanks for having me.
Yeah, so before we get into the local commodities, we see markets are roiled today as U.S. tariffs on Mexico, Canada, China, that comes into effect today. How are you seeing what's playing out so far?
First and foremost, it's tariff today and no tariff tomorrow. I think it's part of a bargaining chip, but the markets don't like it. And you can see the markets across the world, in Europe, in Asia, have all fallen precipitously. So we expect this to play into the fact that the negotiation between the US and China and Mexico and Canada is going to be short-lived. In other words, the US has to concede something on the trade front, but also has to concede something on the immigration front as well. So there are three things at play here. One, the Ukraine-Russia crisis and the NATO thing. Two is the tariff, and three is the immigration. I think in all, there'll be a composite solution that will resolve all of these matters. But the markets, of course, are reacting, and Trump watches the markets very closely. And we've seen the markets come down sharply. We've also seen Bitcoin, I think, also take a hit. So generally speaking, I think before the end of today or tomorrow, there'll be some further negotiations, and then things will settle. But talking about that, you've seen what has happened to the price of oil, and the Brent is now all the way down to $70 and could trade lower. At this point, Nigeria's revenues are in deep trouble. And so, yes, we see things are improving, but we should take note that the price of oil and the production of oil is critical to our economy at any point in time. This is very important to note.
Right. And talking about oil, Mr. Rewane, we know the relationship between oil and PMS prices. You know, once oil prices go up, you expect PMS or fuel prices to actually go up when it comes down. And we're seeing it down this morning, but we see the NNPCL, they've reduced their pump price. And some are wondering, you know, this is great. You know, the price war, I guess, is great for consumers at this point. But we're hearing the sounds of subsidy. Is that coming into play at all here?
No, I think that in a price war, nobody wins. The consumer wins in short run, then eventually the markets go back to where it is. Amongst the suppliers, they fight themselves, and somebody dies and the other one survives. But basically, at the end of the day, I think between now and June, until the price leadership is firmly established, and that is what has happened. Dangote is the price leader. He's the dominant player. He has over 90% of the supply. And he's determined to ensure, one, that the price and quality is guaranteed. And he's also determined to ensure that he has uniform pricing across the country, using all the resources he has before. And don't forget, this is Africa's richest man and 63rd largest, richest man in the world. So he has the resources and he has the determination, and he's definitely going to win this battle.
So that means it's possible to have lower prices, that's for PMS, without subsidy? Yes. Without subsidy?
Well, there's an element of subsidy in it, but let's not go into the subsidy issue. The question is that it's producing, his cost of production, based on any form of imagination globally, is about the best you can get. Therefore, he continues to be able to pass on the cost efficiencies to the market, and also having to support his position as a dominant player with other resources from other businesses he has. So I wouldn't want to be an opponent of a price leader in a market like this. So generally, between now and June, we'll see prices begin to decline. But after June, and things stabilize, depending on what happens in the global markets, oil and global currency markets, we might begin to see some stabilization.
Right, and for the oil market, we're seeing projected increase in supply to the markets for April. So that's for two sides now. We're seeing bad for government revenue, but I guess good for PMS prices.
Yes, in April, I think what we are seeing, or what we hope to see, is that in April, we see the prices remain at this level at about 860 But I don't see it falling below 860 because at that point begins to eat into the cost. You do not produce where your marginal cost is higher than your marginal revenue. So I think that at this point in time, we should thank God. 860 is about almost, based on the exchange rate today, is about almost 90 or about 80 cents across the country, across West Africa. They're selling about $1.30, $1.20. So let's not lose sight of the fact that we are in this market, we are in this economy, but we have neighbors who are also selling the same product at about $1.25, $1.30. After a while, the equilibrium point is where you are producing and selling in this market without the incentive for people to take it across the border. I think that's very critical for this at this point in time for Nigeria, if we want the reforms to work and for the economy to expand accordingly.
Right, and we're in a new month now, and I guess it's that time again where we take stock of what's to come for inflation for February. And we have discussions around the rebase and the old methodology. What are we seeing for inflation in February?
Yes, we carried out our survey and we're seeing this. Remember that in December, we had inflation as high as almost 34.5%. For the January figure, using the old methodology, mind you, we saw January come down to 33.35. And now we are projecting that February is going to go down to 32. So if you take it all the way from about 35 to 32, it means that inflation has declined by about 3%. And you can see that reflected in some of the nominal prices. We stayed away from the new methodology because we want to compare oranges with oranges and not oranges and apples. So if you look at prices that we see now, current prices, we've seen that beans has come down by 5% to 95,000 naira a bag. We've seen onions come down by 10% to about 90,000 naira a bag. But we've seen tomatoes go up, obviously because of the fasting. Tomatoes has gone up by 33% to 40,000 naira. Pepper has also gone up by 50% from 60,000 naira a bag to 120,000 naira a bag. Strangely, we have seen the price of rice come down by 5% in the last 1 month, in the last 2 weeks actually, to 90,000. So don't forget, in December or November, we're buying a bag of rice for as high as 120,000 naira, 125,000 naira. It's now down to 90,000 naira. Let me tell you this, it's likely to go down to 80,000 naira within the next 2 weeks. That would be great news. But the point is that even if the prices are coming down and the people have no money to buy it, then there's further pressure to bring the price down because there's income and consumer resistance to the current prices.
Right, I guess that's where we see demand destruction, playing in there. But so going by the old methodology and new methodology, it seems inflation is tending downward.
Yes, it's moderating. And when inflation moderates, then there's pressure on the central bank at their meeting in May to actually bring down interest rates. And if interest rates begin to come down marginally, then it begins to send a signal, anchor inflation expectations that we are going to be seeing interest rates decline. And if that happens, we might begin to see some changes in the value of the currency. But as of today, the currency, something happened yesterday. In other words, the dollar strengthened, right? And when the dollar strengthened, dollar weakened yesterday, but it has now strengthened today. We think that the naira begins to trade along, with the dollar. So it's at 1507 right now. We think at the end of today, it probably depreciates a little bit, about 1510, but it's going to stay in that range. Compared to this time last year, at this time last year, the naira dollar rate was 1,910. Today, we are 400 naira cheaper. In other words, the naira is stronger by 400 naira compared to where it was at this time last year. But don't forget, this time last year, it also went all the way. It appreciated all the way to about 1310, right, before going back up. So we have to be careful when we're talking about the currency values, but it is driven by a number of things, especially now that the price of oil is dropping. So the amount of dollars we earn from crude oil sales may not be as much as we used to earn at this time last year.
And for the Purchasing Managers Index, we have some good news there, the one reported by Stanbic, and we're seeing expansion there in the economy.
I think that is excellent news in the sense that the PMI, the Purchasing Managers Index, is the leading indicator. When you see it expand, it means that growth is going to expand in the following quarter. And where are we seeing this? We are seeing this in inventories. We are seeing this in orders. We are seeing this in employment of resources. And therefore, if it's at 53, it's very well entrenched in the expansion territory. It means that even though we got 3.8% growth in the last and the Q4, it means that in Q1, we are likely to see further expansion. And that would be great news. Don't forget the 3.8% growth we saw reported in Q4 was based on the old base year, the old methodology. So now I think the NBS is very cognizant of the fact that people want to see stability and want to see data credibility and data integrity. So with the GDP numbers, there's a lot of data integrity. And if that expands again, then that would be great news in terms of seeing economic activity pick up. And do not forget that it is in the first quarter of this year that we saw the tariff increase on telecoms. We've seen a drop in the price of petrol significantly, and we've seen the stability in the price of diesel. We've seen the exchange rate appreciate by about 9%. We are told that the Nigerian naira is probably the best performing currency in Africa in the last 2 months. Whether this will hold becomes another issue. So let's not, again, I always say, let's not get carried away. But when you have the good news, hold on to it and run with it.
All right, we'll be running with good news at this point. Thank you so much, Mr. Rewane, MD CEO, Financial Derivatives Company. Thank you.
Thank you for having me.